Trading Pits of Chicago. Bob Iaccino of TraderOutlook.com joining us now from the CME. You know, Bob, we're just having this conversation here. It was a pretty ugly close on Friday. A bunch of technicians were saying 1327 was the new level on the S&P. As we come into this Monday morning here, do we take anything from last week that we have to carry over into today?
Well, Gary, you made a great point a few minutes ago. Last week seemed like 4 or 5 months ago, that with all the volatility we had, all the up and down. And that tells you a lot about the what of the market. I tell a lot of people that I teach to trade that now's the time where you kind of need to ignore the why of the market and more play the what. And I find myself in a buy the dip scenario as opposed to a flat out buy scenario, which you know, is on record as saying that's what I wanted to do in January. January, I just wanted to buy everything. But now I'm looking at dips to buy. I don't have a conviction about the next few weeks or even the next few months. So I've got levels sort of scoped out to scale into long positions into the S&P as opposed to just flat out buy it and think that we've got another 4 or 5% in it.
You know, there was a good piece of the New York Times this week, and profits have stalled has the market, trying to tie in this idea that there hasn't been a lot of expectations for earnings, what we had last week, what we have this week. If I was to say to you, earnings come in great this week, but the problems in Europe continue to sort of mount and they become headline-type problems later this week, do you think the market's higher or lower at the end of this week?
I think lower. Gary, you have a trading background, obviously. So when you think about what the earnings are going to do, the equity markets, the futures markets are the same in that they look forward. So even if earnings continue to come out strong, we're still looking at a perspective of, I put a lot of stock in anecdotal evidence, and I live across the hall from a small business owner named Mickey Shaver. I was talking to him this weekend, and he told me that he thinks it's going to continue to be a jobless recovery because during the hard times, he was forced to put things in place in his business that made them run leaner. And in the first quarter, last quarter of last year, first quarter of this year, he has high profitability, but not higher margins. So those things that he put into place to improve his profitability are giving him profits, but are still not forcing him to hire because he has these. I think that's across the spectrum. So I think margin, I think gross sales are going to struggle. It's still a demand story. So I really think we have a tough summer. I'm still buying dips, but I'm waiting for those dips to buy.
All right, final question. You think we've seen the high of the year on the S&P or we'll see some gains later this year?
I think we'll see some gains in the late third quarter, early fourth quarter. I think that's when things start to stabilize. I'm superstitious about the sell in May, and given what's going on with crude prices, the warm summer, that natural gas sort of appeasement that we had over the winter is now over. We're not going to see that extra. We're going to see our electric bills go higher.
All right, great. Thanks, Bob. Have a good week, and we'll check in again soon.